Every Bitcoin transaction that has ever occurred is recorded permanently and publicly on the blockchain. Every wallet that has ever held Bitcoin is visible. The amount of Bitcoin that hasn't moved in 1 year, 2 years, 5 years, it's all calculable in real time. This level of transparency is unprecedented in any financial market. Equity markets don't reveal every shareholder's cost basis. Bond markets don't show every holder's duration. But Bitcoin's blockchain does, and institutions that know how to read it have a systematic information advantage. On-chain analytics has evolved from a niche technical discipline into a core component of institutional crypto research at firms like Grayscale, Fidelity Digital Assets, and Galaxy Digital. This video maps the most actionable on-chain metrics, the ones that have historically provided leading signals for market turning points, and explains how institutional portfolio managers incorporate them into investment decision frameworks. On-chain analytics applies data science to blockchain transaction data to derive insights about market structure, investor behavior, and network health. Unlike traditional financial markets where holdings and transaction data are private or disclosed with significant delay, blockchain data is available in real time to anyone who can process it. The key analytical entities are UTXOs, unspent transaction outputs, which are the basic unit of Bitcoin ownership. Each UTXO has a creation date, an amount, and a history of prior transactions. By analyzing the age distribution of UTXOs, analysts can determine what percentage of Bitcoin supply has been held for more than 1 year, a proxy for long-term holder conviction. By analyzing UTXO profit and loss status, whether a coin was acquired at a price above or below current market, analysts can determine the market's unrealized gain and loss profile. These metrics have historically predicted significant market turning points with more accuracy than traditional price and volume analysis. The institutional use of on-chain analytics has grown significantly as data quality and tooling have improved. Glassnode, the leading on-chain analytics platform, serves over 2,000 institutional clients including hedge funds, asset managers, and mining companies. Chainalysis generated over $100 million in revenue in 2024, primarily from regulatory and compliance clients including the IRS, SEC, and Treasury. Nansen, focused on Ethereum and DoFi on-chain data, raised $75 million from institutional investors in 2022. Several key metrics have demonstrated historical predictive value. The MVRV ratio, market value divided by realized value, has accurately signaled Bitcoin market tops when it exceeds 3.5 and market bottoms when it falls below 1.0. Long-term holder supply, Bitcoin unmoved for more than 1 year, reached 70% of circulating supply in late 2023, a historically reliable signal of supply tightness that preceded the 2024 bull market. Institutional on-chain analytics divides into 2 primary use cases with different analytical frameworks. The first is market intelligence, using on-chain data to understand investor positioning, supply dynamics, and leading indicators for price. Metrics like MVRV ratio, long-term holder supply, and exchange net flows are the primary tools. The second is compliance and risk management, using blockchain analytics to screen counterparty wallets for illicit fund exposure, verify exchange proof of reserves, and monitor for sanctions violations. Chainalysis and Elliptic are the primary vendors in this space. The compliance use case is operationally mandatory for regulated institutions. It's not optional analysis but a regulatory requirement for AML programs. The market intelligence use case is increasingly part of institutional investment process at leading crypto-focused funds, providing on-chain data inputs alongside traditional price and volume analysis. On-chain analytics creates institutional risks as well as opportunities. Over-reliance risk is primary. On-chain metrics are historically correlated with market cycles but are not predictive with certainty. The MVRV ratio exceeded 3.5 multiple times during the 2021 bull market before the eventual top. An institution that sold every time MVRV hit 3.5 in 2021 would have exited 6 to 12 months early. Data privacy and competitive intelligence risk is second. Institutions that develop proprietary on-chain analytics capabilities reveal information about their own investment processes through their data subscriptions and methodologies. Third is compliance risk from false negatives in wallet screening. Blockchain analytics tools have known coverage gaps, particularly for privacy coins and cross-chain transactions. An institution that relies solely on Chainalysis for AML screening and clears a wallet that Chainalysis cannot trace is not automatically protected from BSA liability. Fidelity Digital Assets on-chain research program is the most thorough example of institutional blockchain data integration. Fidelity dedicated a team of on-chain analysts starting in 2019 to produce regular research reports on Bitcoin network health using Glassnode and proprietary data tools. Their Bitcoin investment thesis report, published annually, integrates on-chain metrics including long-term holder supply, realized price, and hash rate trends alongside traditional macroeconomic factors. Fidelity's 2022 annual report highlighted the unprecedented compression of MVRV ratio to below 1.0, a historically reliable bottom signal, alongside extreme long-term holder supply as a fundamental argument for Bitcoin accumulation during the bear market. These research outputs, which combined on-chain and macro data in an institutionally rigorous framework, helped position Fidelity as the preferred institutional Bitcoin custodian and led to FBTC's launch as one of the strongest performing spot ETFs in January 2024. Institutions building an on-chain analytics capability should follow a four-step framework. Step 1 is metric prioritization. Identify the 5 to 10 on-chain metrics with the strongest historical signal-to-noise ratio for the institution's investment horizon. MVRV ratio, long-term holder supply percentage, realized price, and exchange net flow are the core four. Step 2 is data infrastructure. Establish data feeds from Glassnode or Nansen and build dashboards that make the metrics accessible to portfolio managers without requiring raw blockchain parsing. Step 3 is signal integration. Define how on-chain metrics are incorporated into the investment process, as qualitative context, as quantitative signals with defined thresholds, or as systematic trading triggers. Step 4 is compliance integration. Ensure blockchain analytics vendor coverage is integrated into AML wallet screening processes with documented methodology, coverage limitations, and escalation procedures. 3 on-chain analytics mistakes are common in institutional programs. First, treating single on-chain metrics as standalone trading signals without macro and sentiment context. MVRV alone correctly identified multiple cycles but generated false signals during the 2021 halving cycle when unusual institutional demand drove metrics above historical tops. Second, relying on on-chain analytics for compliance without understanding coverage limitations. Privacy coin gaps and cross-chain bridge transactions are known blind spots that must be documented and escalated when encountered. Third, failing to maintain data vendor relationships. On-chain analytics vendors continuously update their entity labeling and transaction coverage. Institutions must stay current with methodology updates to avoid stale data. On-chain analytics provides institutional investors with an information advantage unavailable in any other asset class. Direct, real-time visibility into supply dynamics, holder conviction, and exchange positioning. Used correctly with appropriate context and macro overlay, it materially improves investment decision quality. Used incorrectly as a mechanical trading system without discretion, it generates false signals that cost returns. On-chain analytics is the information edge that separates sophisticated institutional crypto investors from the crowd. Building this capability is increasingly table stakes for crypto-forward allocators. Subscribe to Crypto Mechanics for institutional-grade crypto analysis delivered weekly.